Welcome to CUFIS Network.
Hey guys, welcome to CUFIS podcast number 3. I'm Zhou Yang, Marketing Director at Cambridge University Finance and Investment Society. And today we'll be diving deep into the world of venture capital. For that, we have a very special guest with us today, Mr. James Tan. James is currently the managing partner of Quest Ventures, a leading venture capital fund in Asia that has invested in some of the region's most successful startups, including Carousell, an e-commerce platform currently valued at $850 million. Before founding Quest Ventures, James was an entrepreneur himself, having founded Wowo, a NASDAQ-listed daily deals platform. James was also actually my mentor back in 2019 when I did an internship at Quest, and I must say that I have really learned so much from him about the whole business of venture capital and startups. And it's so great to have you on the podcast today, James.
Thank you. Thank you, Zhou Yang.
So what is a typical day like at work for you?
I try to be up and functional by 6 a.m. Starting early has many benefits. The hours are quiet, there are no distractions, and the mind is clear. I reserve time to myself until about 10 a.m. when I start to take meetings. My meetings at Quest Ventures are generally divided into 3 broad chunks. As you know, since you were working for a while there, existing portfolio companies, potential portfolio companies, and then finally with partners and internal staff. These, broadly speaking, take up equal chunks.
I do remember receiving emails from you really early in the morning back during my internship. And waking up early seems like quite a common lifestyle of startup CEOs and venture capitalists. Are there any other productivity hacks that you would recommend?
Productivity hacks. I try my best not to take external meetings on Mondays and Fridays and reserve them entirely for internal, meaning for Quest Ventures use only. It helps that we are not always driven by the time demands of external parties, and really reserve some time for ourselves to think and to take care of the people that we hired to drive the company forward.
Yeah, actually, having our weekly Monday meetings was something that I really enjoyed to get regular feedback on my work. And yeah, I think having specific time set aside for internal matters is one very good experience that I had at Quest Ventures. Now, one thing that's probably on everyone's minds right now is COVID-19 and its economic consequences. So what's the overall environment like in terms of VC fundraising for startups right now amidst the global pandemic? Has COVID-19 slammed on the brakes?
VC fundraising for startups has generally taken a slowdown, has taken a hit. VCs are able to invest because they are able to raise investments themselves from what we call limited partners. And for VCs who have already raised funds from limited partners, they now have to deploy those funds. And they will deploy those funds generally over an active investment period of 3, maybe up to 5 years. And these VCs will continue to invest unless they are cautious or overly cautious and choose not to do so. But otherwise, we see that they are continuing to invest. VCs which are trying to raise new investors' interest from limited partners, I would state that they are mostly hit at the moment. Limited partners are also cautious. They want to deploy funds into venture capital firms that are at least stable or know how to navigate crises. Crises don't come about so often, but when they come about, they are really opportunities for people who are smart, I guess, to tap into. So VCs who are investing right now into startups, I would say, are investing into a good cycle. Startups are getting hit, and therefore their valuations are also suffering. But that doesn't mean that their business model or have any fundamental flaws. It's just the economic climate, which they can't control. So I would say the right approach right now for VC fundraising into startup is to continue to do so, which we are at Quest Ventures. And if there are any good companies that come your way, please feel free to refer them to us.
I will definitely keep that in mind. So I guess about 10 years ago, with the global financial crisis, that was the period where a lot of prominent startups came about, like Uber, Instagram, and Slack. So there have been, some talk about, how this is really the prime time, like you said, a very good time for, startups and venture capital investments. Do you think that this will be a period where the next Uber or Instagram comes along?
Absolutely, absolutely. So, crises are when really great companies get created. If they can function in a climate of funding scarcity, uncertain business environment, if they can do so, then I'm very sure they will do even better when the climate recovers. Even my own company, we also started in the tail end of the great financial crisis back in 2009, 2010. So I believe, like you said, that great companies will be created in this time.
Okay, thank you. You've also mentioned that there will be VCs, that are more cautious, might be more reluctant to put investment during this very uncertain period. Since they have an investment cycle of 3 to 5 years, do you expect there to be a flurry of investments once this pandemic situation stabilizes to a certain extent?
For those who are cautious, definitely, then therefore they will have what we call dry powder. Investments which have been already given to them by or committed to them by limited partners, and they will have to invest out. But if you are going into a market where so many other firms are trying to invest at the same time, then naturally you will have inflation of valuation. And even if the price is inflated, it doesn't mean that you will get into a round if the startup is oversubscribed. So in both cases, it's bad for VCs at that point in time, which is why we are just continuing to invest during this climate.
That certainly makes more sense on why Quest is continuing to invest even in this uncertain periods. Now, Quest has completed its first close of the 50 million fund just this year amidst the coronavirus, and we talked about raising money from institutional investors just now. And at this point, I imagine the fundraising hustle continues. And how has it been so far?
I assume you're referring to fund managers raising money from limited partners.
Yes.
If fund managers have a proven track record, and they have demonstrated that track record over time, it's not just a one fund thing or maybe a luck thing. And they have successfully demonstrated that they are able to raise not just from smaller investors or informal investors, but from institutional investors, such as sovereign wealth funds or family office or corporations out there. I think this will stand them in very good state to continue fundraising. For funds that don't have such track record, we have seen such funds either becoming have to be very comfortable with what they've raised so far, and therefore call it a day on whatever amount that they've raised and start to deploy.
So what about relationship building during this coronavirus period? I mean, it's more difficult to have meetings with limited partners and discuss over Zoom, because a lot of these interactions, they kind of rely on subtleties, when on face-to-face interactions, the kind of we say vibe that you get from the people that you might put money in. Has that affected your fundraising process in any way so far?
So Zoom has definitely helped. Virtual calls have definitely helped, but nothing beats in-person meeting, handshake, and like you said, subtle things that happen in a face-to-face meeting. So while Zoom has been helpful and while virtual conference call have been helpful, nothing beats the in-person meetings, and therefore decision making has slowed down. We are still all waiting. Most people are still waiting for in-person meeting to be able to take place before people sign on the dotted line. That is a common problem across the board, whether it is limited partners investing into general partners or VC firms investing into startups.
Recently, VCs have also come under the spotlight in not so positive ways after WeWork and Theranos. Some have said that the days of plowing VC money and just getting market shares as aggressively as possible are over, and COVID has just brought this forward. Do you think there's going to be a big overhaul in the way VC deals are being conducted?
That's a very good question. WeWork and Theranos have definitely put some spotlight on VC in general. On the flip side, then you have the Airbnb and even the Ubers, which have generally done well. But coming back to WeWork and Theranos, I think the main issue with companies like these were that due diligence were not properly conducted. You can say that it might be part of FOMO, it might be part of just trusting that the previous investors in the previous round have done their due diligence. But I think the due diligence should have been done better, especially in Theranos example. There were also a lot of growth at all costs, not focusing on quality revenue, and to a certain extent, even low to no tech when we come to WeWork, where a very traditional business was branded and valued at tech valuations, despite all the examples that I mentioned above, all the factors that I mentioned above. So VC deals right now, I will say that we are generally a bit more cautious as a whole, but you can definitely expect that there will still be gung-ho or cowboy VCs out there who will just go in and just get the deals done. But in general, I think we are still very wary on due diligence. We're careful on due diligence, and we don't want to be funding growth at all costs. We want to fund quality revenue. We want to fund technology that has the potential to scale.
Recent events have actually led a lot of people to warn of a venture capital bubble that will burst very soon. And has that ever been a concern for you?
Venture capital bubbles have happened. I think the first dot-com boom is the most glaring example of it happening. There's definitely a lot of capital flowing around, but if you talk to different stakeholders in the ecosystem, they will tell you different things. For example, in Southeast Asia, where we are based, there is a severe Series B gap. So at the earlier stages, then Series B, Series A, seed, and angel stages, I think those are very well covered. And perhaps even at the angel or the Series seed stage, you might see small bubbles in different countries. So at different stages, you will have different complaints or different feedback on what kind of role that venture capital has been playing.
You mentioned that there's a gap in the Series B stage fundraising in Southeast Asia, and since Quest, as I know, has been focusing on seed and Series A, have you ever considered a move into this Series B, especially amidst COVID when prices are getting driven down?
We have considered, but it is not to consider Series B per se. It is to consider Series B companies that are now raising at valuations that are comparable to Series A valuation. Despite how they want to brand it, whether it's a pre-Series B, a Series post, a Series A plus, Series A2, it would have been a Series B if the climate was good. So we are looking at such deals where we think the fundamentals are still all right. The company is still definitely in a segment of the market where there's a huge potential, and all that is missing is just a bit of capital to tide them over this period.
So what about your traditional Series A and seed deals? What are the three main criteria for you to consider when investing $500,000 or more in an early stage company, and why?
Okay, so I think this part on what we will be considering as a decision criteria before we invest into companies will be what you would be familiar with when you were at Quest also. This will be on the we must be investing into companies that are targeting large markets and the large internet population at the minimum, and then they would have scalability and replicability. This remains true. This has remained true to us for the last almost 10 years, and it continues to remain very true today. Scale, we define it as a company that can generate, say, a $1 million business in a city like Singapore, and then grow it to $10 million still in Singapore, $100 million business still in Singapore. In terms of replication, or what we call replicability, it is to take that business into a different city, such as Manila, such as Kuala Lumpur, Jakarta, and so on, and start from one again, and then grow it to 10, grow it to 100. Southeast Asia has many cities. They are all disparate. So what works in one city may not work in another city. So we want to make sure that what we invest into not just target the entire very significantly large market in Southeast Asia, but has replication capabilities across these very different cities.
I see. Quest has also actually invested in startups all over Asia and even started accelerators in Kazakhstan and Vietnam. What do you think is the attraction of this region as a whole, and what makes it so good for startups?
So on Vietnam, Southeast Asia is the fastest growing region in the world, and Vietnam is the fastest growing country in Southeast Asia. When we talk about GDP, and when we talk about just tech startups as a segment of that GDP or as a segment of that economy. So we want to, and we pride ourselves on being early into many companies and many sectors. And you mentioned Carousell in your introduction. Nobody would have believed 10 years ago or 9 years ago that it would have been possible to buy and sell with a few photographs on a phone. And now everybody is able to do it, and it's a second nature. So we pride ourselves on that. And our sector, venture capital, we have to be taking risk. Calculated as it may be, but it's still risk. And if we don't take enough risk, then we might as well be later stage in the game, maybe in private equity and so on. So for risk to us means being early in the market. And with Vietnam, it is a no-brainer that any investor worth their salt would be in a fast-growing market that has a very large and still growing middle class, that has a propensity to spend, and is very tech-savvy. In Kazakhstan is the node for Central Asia. If you look at Central Asia as a whole, it's a very vibrant market that has been overlooked for years by investors, except when it comes to traditional industries such as oil and gas. And Kazakhstan positioning as the hub for Central Asia mirrors very much what Singapore has done for Southeast Asia, and even to the extent what London has done for Europe as a hub for that region. So we see Kazakhstan as a very good soft landing pad for many Central Asian countries, startups to land in Kazakhstan and use it as a good talent hub and funding hub to scale within Kazakhstan, and then thereafter take it to the rest of Central Asia, if not the world. So we also recognize that this region and even Vietnam itself are early in the game, and because they're early, they necessarily don't need Series C, Series E investors. They need early stage investors. And the way to encourage the entire ecosystem to get together and encourage investments in the early stage is to run accelerators where we can be more assured of the quality of the companies that are generated and raise quality investments for them.
That's actually really interesting. I mean, I've never really connected Kazakhstan and venture capital, but now after hearing this from you, it makes a lot more sense now. Now I'd just like to ask, actually more related to Vietnam. Vietnam is geographically close to China, but I guess in terms of technology, it's more aligned with the US. And with the recent events and the possible decoupling between the American and Chinese system, do you see potential issues for startups growing in Vietnam?
Well, that's a very good question. The decoupling is real. So, but if you're on Facebook, it's unlikely that you are going to switch to Renren or anything else very soon. So China's apps and China's technology, by the very way that it was given birth to, and by the way, by the very size of its market, it is very inward looking from day one, and only when it has a certain mass, which is really when it has most of the Chinese market, then most of these companies will start to step outwards. By then, most of their technology already has so many Chinese ingredients inside. It is a little bit more difficult to customize it or to have it uh, adaptable to what people who are already used to Google and Facebook are therefore familiar with, which is why today most of the successful companies or tech companies that you see outside of China are hardware companies, are your Lenovo's or your Xiaomi, because people build on top of that, and they are the underlying layer that are technologically very strong. Manufacturing is very strong, but otherwise people will customize and build on top of it. The apps that have come out that have dominated the world are very few and far in between. This will be the likes of TikTok and to a lesser extent WeChat. You don't see many more of such examples. You would see more of such examples coming out from obviously the US and to a lesser extent Europe, and then maybe to a certain extent India.
These are actually very interesting points. Now I'll be asking some more general questions about venture capital as a profession. So what are some qualities do you think that will make a very successful venture capitalist?
Okay. I think the most important thing is to be hardworking. We have a phrase here, New Zealand labore, which is nothing without hard work. So be very hardworking. Second thing will be very curious. We are always looking for new things to support, new things to back and invest in. So we have to be curious. One thing we see in many older VC firms is that the older partners who have years of experience in investing are no longer as interested in game-changing new technologies for whatever reason. And I hope that this doesn't we don't fall into the same category or have the same fate. We want to be always curious and always looking out for the next big thing to support and to back. And to do so, we have to just be hardworking and just go out there and look for new deals, talk to people who are in the game, and just understand a lot more.
Okay. Do you think there's a degree that provides the most relevant skills for a career in VC?
Degrees that are helpful in our sector, besides the hard sciences such as programming and computer science and quantitative finance, will also be just your traditional finance degrees such as accounting, business administration, finance. There are also degrees in entrepreneurship, although I think if you are going to spend that 30,000 pounds on a degree in entrepreneurship, you might as well use it as your seed capital to start something. So these degrees that I mentioned earlier will be very helpful, and we do our recruitment from these sectors. Having said that, we do also require or recruit from industry-specific sectors. For example, if we are investing into IoT or Industry 4.0, then we might be looking for people who are strong in engineering, mechanical engineering, civil engineering, and so on, because they bring the necessary industry experience to us.
Okay, that's actually a really broad range of degrees that venture capitalists seem to be looking out for, and I guess this really shows like the diversity that can be found within this sector as a whole. Now, is there anything that people seem to always misunderstand about running a VC fund?
Misconceptions would include a misconception of us being too glamorous or very glamorous industry to be in. That they will also misunderstand us as being very founder-centric or founder-oriented, founder-friendly. And lastly, a misconception might be that this VC world is for the wealthy. all three of the above are false. VC world, like most other sectors out there, I'll say, are not glamorous. There's a lot of hard work that goes on behind the scene. Despite what you see on panels or on conferences and so on, we are all like ducks. We look very calm on the surface, but underneath there's a lot of hard work that goes on to keep us from one end of the pond to the other end. Then in terms of being founder friendly and so on, I would say that not every investors are like that. I pride maybe Quest Ventures on being so. VCs are ultimately financial managers. They have to deliver returns. So startups ultimately still have to generate liquidity events or exits for the investment firms. And these liquidity events come in the form of either a public exit or a private sale. And these have to be generated within a fund life. So you can imagine that investors investing into a startup would be very, very soon, they'll have this discussion with the founders on how soon they can exit and with what kind of multiples. At Quest, we don't necessarily enter into that conversation very early because we think it is much more important to build a business first. And the last misconception is that this is for the wealthy. That is not entirely false. You do have to have some capital of your own to run a VC fund. But if you have a track record of either running a successful company before or been part of a successful VC fund before, I'm pretty sure that you can get support from limited partners to support you in your own fund. So yeah, these will be the three common misconceptions about VC funds.
Yeah, those really do seem to be things that people seem to have a wrong idea about when it comes to VC. Now, before we end off, what advice would you like to give to students who are keen on a career in VC?
I think they can be like you, take internship directly in VC firms. And failing to do so, they can always take internships in related industries, such as consulting firms, legal firms, finance and audit firms. These are all service providers to venture capital firms. And although I would think that maybe the internship may not be as good as taking it directly in a VC firm, they still nonetheless provide you some good perspective on how VC firms or private equity firms in general work. That's on internship. I think regardless of whether you want to join a VC firm or private equity firm, or when we talk about internship, I think the most important thing is to begin with the end in mind. What do you really want to do with your life? You may not know what you want to do in 40 years, 30 years time, but surely you should know what you want to do in 5 years time. And if what you want to do in 5 years time is to have back a company that is game changing, then perhaps VC would be the way to go. And then you start searching. So don't come into VC firm because we are glamorous or startup friendly or wealthy and so on. Don't do that. Do it only because it is something you really want to do and you began with the end in mind.
Yeah, that's so true. Like, so important to start out knowing what you want to do and having an end in mind before you look at all these different industries and choosing which one to spend 2 months or even more on an internship in. Anyway, that will be all for this third episode of the CUFIS podcast. Thank you so much for your time and the really insightful answers, James.
Thank you, Zhou Yang.